Rich Sassman here with Century 21 Affiliated. That's Scott Swinford with Hancock Mortgage, and welcome to another Mortgage Tip Monday.
Hi, everybody. Hey, Rich.
Oh man, it's cold outside, but we got great news. It's tax return season, and we got some great info and some. Let's be cautious. So let's start off with the good stuff. Let's talk about your tax refund, money that you overpaid to the government, and you're getting it back. So what should you do with that? That's a great little extra paycheck to help put down for a down payment. You can pay off some credit cards to raise your credit score, get a better interest rate.
Nah, you should buy a boat.
Buy a boat?
Yeah, no. Unfortunately, those things that are depreciated assets don't help you a whole lot. But no, Rich, you're absolutely right, though. Pay down credit cards, pay off some debt, and certainly you can use that for down payment on a new house because that is it is verified income or verified assets, so there's no question about where it came from because you either have a copy of your check the government sends you or it's a direct deposit, so it's pretty easy to use.
Yeah, and it's something that most people are getting, and they're not sure what to do. So if you are in the market for a house, contact either your financial advisor, your loan officer that you're working with. Hopefully it's Scott, and figure out what the best use for that money is, because you may not need to put that money down into your down payment. It may be better served for you to put it on some credit card, some student loan, something that is getting rid of debt to raise your credit score. But either way, it's a great thing to use, and I hope everybody gets the most that they're deserving to get back.
Right. Well, as I said before, it's options. So, Rich, if you don't need it for the down payment and you don't have credit cards that you have to pay down, certainly that can be moving expenses, paint, furniture, things that you wouldn't have to charge. So again, it's all about options.
Yeah. So that's the good news. And the next thing is a cautionary tale. I've been getting tons of these letters every week, so I have a lot of clients of mine that have asked me, are these real? Are these good? And that's offers to refinance your home from big companies that you've heard of to little companies that you've never heard of sending you stuff. Some of them look pretty darn official. Some of them make it look like actual tax forms and actual things sent out by the government, and 100% not the case. So one telltale sign in the fine print, you'll see this is a solicitation. Usually in the fine print, the equal housing logo. That's also a good clue that it's an advertisement for a mortgage company. And more so about being cautious with this is how much they're charging you to do this stuff. And I've seen some of them, a pretty big company. I ran through the pages just to see what they were going to charge me online and whatnot, and the fees just to refinance was about $8,000. I wish I was joking, but that kind of defeats the purpose of refinancing.
Right. Well, Rich, it all depends. Because you're right, you do need to look at those solicitations that you get and see who they're from. And sometimes it does look very formal, and it might say, this is in reference to your loan at Hancock Mortgage Partners. And then down below in a really fine print it says it's ABC Lending or whatever it happens to be. And this is what happens. Here's the kind of the behind the scenes of the mortgage industry is there's something out there called trigger leads. And what those are is you guys all probably know, TransUnion, Experian, and Equifax are the three main credit bureaus. What they do is they just gather your information and they hold it. They're like a bank of information. So what happens is when we go to pull your credit, we pay them to get the information from you from inside their little vault. And then when we hit that enter button to get it, that's when it calculates your credit scores and things like that. You don't have any static credit score. It's very liquid. It's literally calculated right then. But the other side of the coin is then they take that information that we've submitted. For instance, Rich Sassman is looking to, we pulled his credit for a mortgage, and now it's got his information on there. Now they go off and they'll call, or they'll what they call sell trigger leads, where they'll sell that to ABC Mortgage and they'll go, hey, Rich Sassman just had his credit pulled for a mortgage. He might be in the market. You should solicit him. Now pay us and we'll give you all his information. And that's exactly what they do.
Yes.
I had a client who 2 days after we completed an application was receiving calls even at work asking her that for more information on the refinance, and they weren't from me. So just be very cautious. There are some companies out there that do it, and how they do it essentially, Rich, is, if you didn't know, is they'll go to say TransUnion and they'll say we want everybody that has had a recent credit inquiry by a mortgage company that has at least say 660 credit scores and has been in their home at least 1 year,
Yes.
or whatever the criteria is they set up, and then they'll buy 100,000 leads, for instance, and they'll send out all these letters or they'll start calling. It just depends on the size of the company, but that's exactly what they'll do. And we've had a few companies that, because we don't handle the servicing at our particular company at Hancock, where it might go to another mortgage company, we've even had those other servicers that are now reaching out to our clients saying, hey, we can give you a better deal on this. But when you look at the fine print on them, and like Rich and I were talking off camera, he said there was a lot of fees on there. But what they were talking about was a streamlined refinance where you can only finance the amount of the mortgage that's due. You can't roll in closing costs. But they're promising no closing costs. So how do you do that? Is they up the rate to get you a credit at closing to cover those closing costs. So what's happening is you're getting a higher interest rate than you would normally get if we managed to somehow put it together a little bit differently.
Yeah, and here, I'll use mine for specifics here. They were no closing costs and whatnot, and but it was $3,000 basically buy down the PMI that's on it, which I mean I've owned my house for a while, so I could refinance and get out of PMI and have a conventional loan, no problem. But I was curious about this advertisement. So basically, my rate right now is 3.49, I think, and it would have gone to 2.9. So, okay, I'd save a little bit there, and on average, I would save about $98 a month and whatnot in my mortgage payment. Which, if you plan on being in your house longer than what it's going to cost to in the loan to get, then it's definitely worth it for some people because there's no credit check, no appraisal, nothing like that you have to worry about, which is a great thing if you don't have stable income right now due to COVID or something. So there is a way to save money, but you gotta think: are you going to be in your house for that long to make it worth the while? And or the other option is if you want to get rid of your PMI, which will reduce without even going to a lower rate, you'll lower your monthly payment a lot by going to a conventional loan. So all those are huge options, and basically Scott will tell you what's the best option for you right now. And if your credit and everything's a little messed up, maybe doing that FHA streamline thing that saves me $100, maybe that would be the best thing for me. Or maybe refinancing into conventional would be even better going through him. And the best thing is, he'll be honest about it. Whatever works best for the client, we're going to push him to. And Scott fully believes in that.
Right. Yeah, you have to be careful, Rich, too. When you read those, if you read the fine print, there are some exclusions in there. So as you should know, that normally the interest rate you receive will be based upon your credit score. So if they're not pulling your credit score, how can they promise you an interest rate? And they can't.
Yeah.
So when someone is giving you that, and there's a lot of rules that are out there, and I think the CFPB is going to start kind of cracking down a little bit, is a lot of these programs, a lot of the flyers you see are really considered bait and switch.
Yeah.
They really are.
They
may
are.
not be intentional, but what they're saying is, here's what the average person could get, or here's what someone who's very highly qualified can get. And you may or may not be able to get that rate or that particular program.
Yeah.
So just be cautious with that. Um, you want to make sure that you're dealing with someone, whether it's me or someone local or someone that you know that you can trust, that is not just soliciting you for this. Because a lot of times when they're paying to buy your information, they have to recoup that somehow, and it may not be in the best interest for it to come out of your pocket.
No. And so to sum it up, basically, if you are getting the solicitations and you are intrigued about seeing if you could get rid of your PMI in your house, contact me for a property valuation, and I can tell you if your home is, if you have more than 20% equity in your home, which would get rid of your PMI in a conventional refi. Now, if I can almost guarantee you 99% of the time you could get a better deal refinancing, getting a mortgage from a local lender like Scott here than from, let's say, a spaceship mortgage or something like that. So,
yeah, there are a lot of options out there. I would just consider, if you're thinking about refinancing, or you've got a rate that's anywhere even from above the high threes or above, consider refinancing. I don't think these low interest rates are going to hang around forever. But again, just be cautious about these solicitations that you receive. Because interest rates are so low, there are a lot of lenders out there that are just sending these letters out or sending emails, and I get these all the time, where you'll get letters in the mail from them. Again, just be cautious, be wary, read the whole fine print, and if you're not even sure about it and you want to call me and just say, hey, I got this from them, send me a copy of it over, let me look at it, and if it's a good deal and if it's better than what I can do, I'll tell you.
yeah. And like I said about the fine print, I actually got one yesterday that promised me a 1.9% for my interest rate. 1.9%. And then you look in the fine print, they're charging me almost 5% in closing costs. And for a $200,000 mortgage, how much is 5%?
It's quite a bit. $10,000.
$10,000.
Plus setting up your escrows and title
Yes.
company fees, closing costs, things like that.
So, hey, do the math and have Scott double check your math, and he'll tell you who has the best deal. And I can probably say 99% of the time, somebody local like you is going to have a better deal. So.
We generally do.
Yeah, he's not a computer algorithm working on recouping their fees that they're sending with the mass mailers. he's a human, and he's gonna try to get you the whatever the best deal is for you. So that's
exactly. And at the end of the day, what I'm really looking for, and I'll be honest, completely upfront with you, is I want you to have a good, positive experience. I want you to remember me. I want you to be happy when you see your new monthly mortgage payment, and I want you to tell your friends when they're thinking about refinancing or purchasing too. So the better job we can do for you, the better it works out for everybody, and that's the honest truth. That's my passion, is lending. Obviously, it's a job. It's what puts the roof over my head, food on our table, my kid in college. But I love working with people and exploring their options to see how we can help them. And at the end of the day, that's the reason they get up in the morning and you go to work, because it's a great feeling to be able to help people and explain these things to them, kind of like what Rich and I are doing right now, and the reason we do these videos. We want to be upfront and transparent and help you out as a buyer or as a current homeowner.
exactly. So if you guys have any questions, please reach out to me, reach out to Scott at any time. For the rest of the frigid week, I hope everybody has a great one. That is Scott Swinford with Hancock Mortgage. I'm Rich Sassman with Century 21. Please give us a call and have a great day.
Bye.